Hello and welcome to Next Gen Finance. My name is Lina Apsheva. I am your host, and today we will be talking about the upcoming annual UN Climate Conference, COP29. In this episode, I will be joined by Samantha Arpas, a sustainable finance analyst at SSAB, who also works with our sustainable finance research. Together, we will go through some of the terminology that is important to keep in mind when following the events of the climate conference and discuss the expectations around COP29. We will also have a chance to hear from Sweden's climate ambassador and chief negotiator at COP29, Mattias Frumerie, as well as from Martin Pei, executive vice president and chief technology officer at the Swedish steel production company SSAB, who will also be traveling to Azerbaijan as part of the Swedish delegation. In addition to this, you will hear about a few upcoming SSAB events that you can tune into to learn more about this and other sustainability-related topics. So let's go. Samantha, thank you so much for joining me in the studio today. How are you?
Yeah, I'm doing great. I'm really excited to be speaking about COP, and I think we have a really interesting COP coming up to tune into. So I think there's going to be a lot of cool insights that we can draw from it.
Definitely. And this year's COP has already been nicknamed as the Finance COP for different reasons, but we will come back to that later. I think one thing we should probably start with as a ground for our discussion is to say a few words about what is COP in general.
Yeah, absolutely. I think it's definitely important to understand before we dissect. So COP stands for Conference of the Parties, and it's the main decision-making body of the United Nations Framework Convention on Climate Change, otherwise known as the UNFCCC. And it happens every year, and it has been happening since 1995. And it brings together global leaders, negotiators, and climate experts to discuss strategies and decision-making on climate action. The main goal of COP itself is to, of course, assess the global progress on climate change, to review the commitments, and, of course, to negotiate binding agreements to curb emissions, enhance adaptation, and secure climate finance. And if you didn't know, COP21 in 2015 was actually where the Paris Agreement was agreed on, and this is where countries are committed to limiting global warming to 1.5 degrees Celsius. So there's a lot of really interesting things that have come out of COP that are very much big in the climate world today. And when you look at the influence on COP, you can see that the agreements that are made within these negotiations are obviously influencing national policies, corporate actions, and of course funding for climate-related projects worldwide. So it's very much important for global climate developments.
And you've mentioned a few terms there like climate finance and adaptation, and these are definitely the terms that we'll come back to in order to get a better understanding and I think a deeper understanding of the conference. But like I mentioned earlier, the theme this year is finance, as stated by this conference's presidency in Azerbaijan. So could you tell us a little bit about why that is and what that means? What can we expect from the finance, quote-unquote, COP?
Yeah, absolutely. So, as you mentioned, COP29 is being labeled the Finance COP, and this is being seen as an opportunity to align climate finance contributions and estimated global needs. And so basically what we know is that transitioning is expensive. I had seen a figure earlier this week from McKinsey saying that from between 2021 to 2050, we need to be spending around 9.2 trillion per year on average to reach net zero. And what we also know is that developing countries are currently facing the most of the climate effects, and they will continue to do so in the future if we do not have action. And so it's these developing countries that are facing the effects of climate change already that are needing climate finance to be able to build low carbon and climate resilient economies, since they're so susceptible to climate damage. And so this is not the first time this is kind of being talked about in a COP. Back in 2009, we saw a commitment that promised to mobilize $100 billion per year by 2020 for developing countries to take climate action. And this target was met in 2022. But when you look at how much money that has brought, we're realizing that it's not enough. So that's why we're revisiting this in COP29 and why the presidency has kind of said, okay, well, we need to increase the overall flow of climate finance by several multitudes for the world to meet the goals set under the Paris Agreement. And so, to answer your question, as a result, there's going to be three things to keep in mind when paying attention to this COP that are very high on the agenda related to climate finance. So, the first is the most critical point, and that is setting the new climate finance quantified goal, which is otherwise referred to as the NCQG. The second will be discussions around the loss and damage fund and figuring out how to grow this fund. And then the third will be about finalizing Article 6 of the Paris Agreement, which concerns carbon markets. And these are, of course, going to be very difficult negotiations. And that's because even though climate finance makes economic sense, since the cost of damage is often more than the cost of the actual solutions, there's going to be divide in people who benefit and people who pay. And these two groups are completely different, and the largest challenge is getting the countries who are not feeling the effects of climate change to make the big contributions. So I think we're in for some really interesting negotiations and outcomes. And I think the hope here is that we will reach agreements so that COP30 can move forward with their agenda and that these agenda points will not have to carry into next year's conference.
Absolutely. And you mentioned climate finance several times, and I think it's pretty self-evident from your answer what that is. It's basically the finance that is used to address the both adaptation issues and the damages from climate-related disasters in the countries, like you mentioned, that are not necessarily the ones that contributed to climate change for the most part, but are suffering the most. But actually, I think that is quite an interesting topic, because if we look at the events of the past couple weeks, even couple months, we've seen so many floods in Europe, in Poland, in France, and now most recently a devastating flood in Valencia in Spain. So I think that's something that, well, I'm personally curious of how those events are going to play out in the negotiations, because now all of a sudden it's not only the developing countries that are experiencing these devastating effects of climate change, but even countries in Europe that are facing these consequences of, our actions over the past decades. So definitely a lot of interesting discussions ahead. And you've mentioned also the new collective quantified goal. Could you go a little bit more into what that is?
Yes, absolutely. So the NCQG, it stands for New Collective Quantified Goal, and it's a key element of the Paris Agreement, and it's designed to set a new financial target to support developing countries in their climate actions post-2025. And so the NCQG seeks to fill the gaps in climate finance, building on that previous 100 billion target, which I mentioned earlier, that was set in 2009. So what we're going to be able to see is that the NCQG hopefully gives an updated and more realistic financial framework. And I think this is going to be, of course, a very important discussion because, as you mentioned, things around the world are changing. We're experiencing more climate disasters than ever before. And of course, I mean, the needs just in general for developing countries have changed significantly since 2009. And these countries are requiring significant concessional financial resources. And if you are not familiar with the term concessional, it's financing on below market terms. And to be able to implement adaptation and strategies and mitigation strategies and to build resilient infrastructure and to be able to transition to sustainable energies, all the things that these developing countries need, this sort of concessional financing is needed and is very much focused on how the NCQG will be structured. And so, I mean, we can't talk about it without kind of putting an expectation on what kind of numbers we're looking at. And so basically what I've seen coming out from these high-level expert groups is estimates for climate and nature-related spending requirements for developing countries. And that is sitting at around 2.4 trillion per year. And when you break that down, you have 1.4 trillion coming from domestic resource mobilization, and then the remaining 1 trillion coming from external financing. And I think that's a really interesting point, the external financing, because that's when it starts to get a little bit more complicated. And that's because that includes both public and private finance. And so when we break it down even further, we can expect that 500 billion would come from bilateral and innovative concessional financing, together with MDBs and other development finance, and then the remaining 500 billion from private finance. And so I think what it seems like it will be is that this type of financing is, of course, going to be most likely taking the form of loans over grants. which is more helpful to developing countries in any case. And something that I want to note, as we kind of touched on a little bit, was that this is going to be a debate that goes beyond setting a number. This is going to be a debate that is looking at the actual implementation and answering the questions of who will pay it, what it looks like, in what form, who will voluntarily pay, and what other types of finance count. So as you can see, there's a lot on the table for those at COP regarding the NCQG negotiations. Lots of things to take into account.
Thank you for breaking that down. That's really helpful. And another term that has been mentioned is loss and damage, and specifically loss and damage fund. And that is, of course, an example of the type of financing that is needed to address both mitigation and adaptation issues. Could you tell us a little bit more about this fund?
Yeah, absolutely. So the Loss and Damage Fund was actually created during COP27, and that was created to help countries dealing with direct effects of climate disaster to be able to have immediate recovery. And so, as I previously mentioned, in COP28, we saw that the Loss and Damage Fund had left the conference with some early funding commitments, sitting at around 800 million. But now, of course, the idea in COP29 is to be able to grow this fund. And so, 800 million it doesn't give too much to the fund. And of course, there's a greater funding need. So, the discussions I think that are going to be surrounding this will be quite interesting because a fund like Loss and Damage is going to be the most difficult to raise capital for. And that's mainly because we're dealing with a cash transfer in the form of grants. And when we look at aid budgets in rich countries, there's about 200 billion available per year. And for this fund in the Loss and Damage, there's an aim for at least an additional 100 billion every year by 2030. And so clearly this is not money that can so easily be pulled. It's a question of who has the money to give and who wants to give the money. And, what do they get out of it? And I think more so what we can expect to see in terms of these negotiations is some sort of a systemic mechanism of the likes of something along the lines of what exists within the Oil Pollution Compensation Fund, which is this international agreement where every tanker that leaves port will contribute to the fund, and then the funds will be used if there is an oil disaster somewhere in the world. What I could imagine coming out of COP is that maybe this is a mechanism that could be placed for kilograms of carbon being exported by countries or companies or, something along the lines of that to be able to pull money, maybe not in the same voluntary way as just saying, okay, I have $100 billion to give, here you go. And I think something very important when we talk about a mechanism like this is that the politics surrounding it are so incredibly complex and broad. And something that we cannot forget about when observing this COP is, we've experienced a year with many climate disasters. We're also in a time with many geopolitical tensions around the world. And then to put the cherry on top, we've also had several elections around the world. And at the time of recording this podcast, we still don't know what the results of the US election are. And, there's going to be a lot to be able to have to navigate in this COP, especially when we're talking on the side of cash transfers and, the payment mechanisms and who will pay and who would be willing to pay.
Yes, definitely. And moving away a little bit from the question of climate finance, another thing you mentioned earlier was Article 6. And that is, of course, dealing with carbon markets. I think we should go a little bit more into that, since that is also something that's definitely going to play a big role and is going to be an important outcome of this year's conference.
Yes. And so, let's start with what Article 6 is exactly. Article 6 is part of the Paris Agreement, and it enables countries to trade carbon credits generated from removing or reducing greenhouse gas emissions, which are helping other countries meet their climate goals. And when you break it down, there's 3 trading mechanisms within Article 6. You have a bilateral and multilateral agreement under Article 6.2. You have a global carbon market under Article 6.4, and then a non-market approach under Article 6.8. And that would look like allowing for countries to support each other's climate mitigation efforts without trading carbon credits. To bring it down further into how might Article 6 affect the carbon market, depending on what agreements are reached, we have to first look at what's happening in the current state of carbon markets. And so right now we're experiencing this mute in the demand signal of carbon markets. And what's muting the demand is actually the quality of the carbon credits. And so what we can expect is that the Article 6 negotiations will lead to an enforcement of high standards of international carbon credits. And that's, of course, crucial to maintaining the integrity of the carbon markets and to driving strong, measurable emission reductions. And the way that I can foresee this happening is by them setting clearer operational rules for the accounting of carbon credits, which would lead to transparency and, of course, to avoid double accounting. And then also through the standardization of the emission credits under Article 6.4, which is the global carbon market. That's not only going to improve the trustworthiness of the carbon credits, but it's also going to open an avenue for the private sector to be able to participate in the global carbon market. And I think what is important to remember here is that if an agreement is reached on Article 6, the global carbon market could unlock billions for climate finance, and that could feed into the other discussions that are being had around the table at COP29.
Definitely. So from what I have seen, that is one of the most anticipated, at least in the sustainable finance community, outcomes of the conference. And for our listeners, if you would like to hear a little bit more about carbon offsets specifically or the role of greenhouse gases in finance, then we actually have 2 episodes that we've recorded earlier. One is called Introduction to Carbon Offsets, and another one is Greenhouse Gas Emissions and Finance, the Basics. So can definitely recommend going back a little bit in time and listening. But coming back to the topic of COP29, and before we go into discussing the expectations before the conference, I actually had the chance to give a quick call to Mattias Frumerie, who is Sweden's climate ambassador and chief negotiator for the Swedish delegation at COP29, and ask him about his expectations before the conference. So let's hear what he had to say. So Mattias, what are your expectations before the conference this year?
Well, COP29 has basically one key element to decide on, the new financial goal, or the new quantified collective goal on climate finance, as we call it, which is the successor to the current $100 billion year target, which we agreed to already in 2009, where we as developed countries will be providing finance to support developing countries in their transition. So that's going to be the key negotiated outcome from COP29. But maybe the most important outcome, I would say, is the follow-up to the UAE consensus, which we adopted last year, or the global stocktake decision, where, for example, all countries agreed to transition away from fossil fuels in energy systems, to triple renewable energy by 2030, and to double energy efficiency by 2030. So we want to see those outcomes reflected also in the COP29 outcomes, and maybe more importantly, in the new nationally determined contributions that all countries are to hand in before COP30 next year.
And since this COP this year, COP29, has been nicknamed by some people as the finance COP, with the attention that will be given to finance, what kind of engagement would you like to see from the finance industry and from banks specifically?
Well, not only at this COP, but at every COP, basically, I would say that a strong engagement from the financial sector and the business sector at large is really helpful in terms of us jointly as a global community accelerating our transition and living up to the kind of commitments which we set ourselves in the Paris Agreement, not only when it comes to limiting temperature rise to 1.5, but also creating more resilient societies. And the third goal of the Paris Agreement, which is very relevant to the finance sector, is the transition, or the successive transition of financial flows to support implementation of both the temperature goal and the resilience goal. So the finance sector has a key role in enabling that kind of transition. And like many Swedish financial actors have done, sort of by setting up metrics on how to both measure your business internally, but also to support your clients in how you as a bank, for example, can support their transition. So I would say yes, that the financial sector has a key role in climate action more generally. And the kind of examples that I think Swedish financial actors can share with their peers globally are useful in order for us all to be able to accelerate the transition to net zero.
Thank you so much to Mattias for taking the time to share a few of his thoughts with us. And now let's hear a little bit of the industry perspective from Martin Pei, Executive Vice President and Chief Technology Officer at SSAB. So Martin, thank you so much for taking time to talk to me. So I was wondering if you could share a few of your thoughts before the conference and what are your expectations?
Yeah, thank you for having me at this conversation. Yes, SSAB is participating in this COP conference. And our hope is, of course, countries that are now coming together again will continue to keep the ambitions and targets for mitigating climate change. Mainly this hopefully will result in the same or even higher NDCs, as well as plans to implement those commitments so that we really have a chance to reach the goals set up by the Paris Agreement. For SSAB, of course, we are very engaged in discussing international commonly agreed standards regarding what is regarded or should be regarded as emission-free products, and also to create a level playing field in terms of setting a price of CO2 emissions, as well as the rules regulating international trade, so we can really create demand for emission-free steel products, for example. That's our important issues that we will engage in.
All right, so Samantha, some interesting inputs from the Swedish delegates, and I was especially interested in Mattias's opinion about the role of finance and the expectations around how much finance will be necessary in order for countries to set the new targets and meet, most importantly, those new targets. So I'm wondering, what do you think about the impact, the real impact that the conference might have on the sustainable finance market?
Yeah, absolutely. I mean, I think there's definitely going to be impact to be had on the sustainable finance market. I think Mattias had talked a little bit about one side of it. I could also foresee there being some impact coming from whatever mechanism is placed in the loss and damage fund, whether it is, $1 for every 10 kilograms of carbon that is being sold or something like that. I mean, that's going to create some sort of incentive or a driver for those companies to want to transition to cleaner methods of operation. And so, I mean, I could foresee that being something to really pick up the sustainable finance market going forward, so that, they kind of, don't necessarily have to pay that fee per se, but then they're also not creating so much climate damage. They're not contributing to emissions in that way. And I could see it play out that way. And then, I mean, what we also see when it comes to COPs is that it's not like you go in for 2 weeks and you discuss and then nothing ever makes it into real life. There is, kind of a statistic that goes around that says, 2/3 of these initiatives that come out of COP will have tangible effects come out of them. And I think that can definitely be the case for the sustainable finance market, depending on whatever outcomes are settled at COP29.
Definitely a lot to look forward to and to follow during the 2 weeks of the conference, which, by the way, as a reminder to our listeners, will take place from 11th of November to the 22nd of November. And Samantha, in the past couple of years, we have actually been following the events of the conference live, so to speak, here at the bank and providing some updates. Is it something that we're going to continue doing this year?
Yes, absolutely. We're going to continue to do that. So something that you can look out for is that we'll be publishing our pre-COP expectations on the SEB website. And we will also cover the outcomes of COP in our flagship research report, which is called The Green Bond. And that will be published on the 27th of November on our website and as always sent out to our subscribers.
Exactly. And I would actually like to highlight the Green Bond, the research, even more, and mention that we also have a webinar, right, that accompanies the publication of every new issue of the report that will also take place on the 27th of November. And actually, Mattias Frumerie will also be joining there and discussing his view on the conference that will already at that point have passed, which I think is great, that we not only get to hear his expectations, but also I guess his opinions after we know the outcomes. And in addition to that, we will also be covering the US elections, or the results of the US elections, in that webinar, which is also, of course, an exciting, a bit of nerve-wracking but exciting topic. So is there a way that our listeners could maybe sign up for the webinar, Samantha?
Yes, absolutely. So if you are subscribed, an invitation will go out. And if you would like to be subscribed to Green Bond Communications, you can email greenbonds@seb.se and we can subscribe you.
In addition to that, I would also like to highlight that on the 13th of November, SEB's annual sustainability event, Transition in Numbers, will also take place, and the link to subscribe, or to rather to sign up and to follow that event, is also available on the SEB Group website. And you will hear Samantha's voice once again.
You can't get rid of me. I'm everywhere.
As she will be moderating that event as well. So yeah, a lot of exciting sustainability related events and a lot of information. With that, I think I just have to thank you, Samantha, for joining me in the studio today, and thank you all of our other speakers who took the moment to call in and share their expectations. And of course, thank you to our listeners for tuning in today. If you enjoyed the episode, please feel free to leave a review. And don't forget to subscribe or add the podcast to your favorites, depending on which platform you're listening to us on. This way, you will be notified when new episodes come out and will not miss any in the future. And if you have any questions or suggestions for topics that you would like us to cover in future episodes, please feel free to email us at nextgenfin@seb.se. With that, thank you so much again for tuning in. Take care and goodbye.